Hello and welcome to this video on understanding the stock market. The stock market is an integral part of the economy, and for many people, it serves as a way to invest their money and build wealth over time. In this video, we'll cover the basics of the stock market, including how it works, how to buy and sell stocks, and how to read stock charts. Part 1. What is the stock market? The stock market is a marketplace where companies can issue stocks or shares to the public in exchange for capital. Investors buy and sell these stocks in the stock market, and the price of a stock is determined by supply and demand. When a company is doing well, more people want to buy their stocks, which drives up the price. Conversely, if a company is struggling, fewer people want to buy their stocks, which drives down the price. Part 2. How to buy and sell stocks. Buying and selling stocks is relatively simple and can be done through a brokerage account. A brokerage account is an investment account that allows you to buy and sell stocks, bonds, mutual funds, and other securities. Once you have a brokerage account, you can place buy and sell orders for stocks that you are interested in. When placing an order, you'll specify the number of shares you want to buy or sell, and at what price. It's important to note that the price of a stock can change rapidly, so it's essential to be aware of the current market conditions before placing an order. Part 3. How to read stock charts. Stock charts are a visual representation of a stock's price over time, and they're used by investors to track a stock's performance. Stock charts typically show the stock's price on the y-axis and the time frame on the x-axis. There are different types of stock charts, including line charts, bar charts, and candlestick charts. Line charts are the simplest type of chart and show the stock's price over time. Bar charts show the stock's high, low, open, and close prices for a given time period. Candlestick charts are similar to bar charts, but they provide more information about the stock's price movement and are commonly used by technical analysts. Part 4. Factors that affect stock prices. There are many factors that can affect a stock's price, including company performance, industry trends, and macroeconomic factors. Company performance includes factors such as revenue, earnings, and profit margins. Industry trends refer to the overall state of the industry that the company operates in. For example, if the tech industry is booming, tech stocks may perform well. Finally, macroeconomic factors include things like interest rates, inflation, and unemployment rates. These factors can impact the overall economy, which can, in turn, impact the stock market. Part 5. Risks and rewards of investing in the stock market. Investing in the stock market can be a rewarding way to build wealth, but it also comes with risks. The stock market is volatile and can experience significant fluctuations in a short period of time. Investors can lose money if they invest in the wrong stocks or if the market experiences a downturn. However, investing in the stock market over the long term can provide higher returns than other types of investments. So there you have it. A basic understanding of the stock market, including how it works, how to buy and sell stocks, and how to read stock charts. Investing in the stock market can be a great way to build wealth over time, but it's essential to do your research and understand the risks involved. Thanks for watching, and happy investing!